Right. Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay, on this Risk On Again Monday. Peace is
Risk
broken out throughout the tariff world.
Risk is back on in the markets, and we are back on. And it does not feel like a Monday. It feels like it's already like something. But welcome back to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay. I've been a Topstep performance coach since June 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experiences, some knowledge, and hopefully help you become a better trader.
Thank you for that, Coach Paul. You're all our chat, our audience. Thank you for joining us each and every day that you do. I do the show without you, and we got Coach Hoop helping us moderate this thing. Let's get going. Crazy day. Any news today, says Ileana Gonzalez. Was there any news today? Let's take a look at the Trader Hub. As far as planned numbers goes, we are still in this government shutdown, so some of the planned numbers we may not be getting. But the news and why we gapped up is that we may be closer to a trade deal. I think we heard over the weekend that some of the things that were going to be included in this trade deal, maybe China buying U.S. soybeans, maybe we're closer to a trade deal. I'm going to say this, and I've said it since we heard the tariff headlines initially this year, Coach Paul.
Mm-hmm.
I'll believe there's a trade deal when there's a trade deal.
And I heartily agree with you.
Right.
Talk is cheap, but margin costs money, and it's I would expected this to happen because why go to Asia to have no deal? But we've been down this road, haven't we?
We have
A
been.
lot of talk back and forth. We'll see when it's signed and running.
And sealed, delivered. Shout out to Stevie. But with that being said, whether there's no trade deal or there is a trade deal, the markets are kind of, the news was that we're jumping at any inkling of a trade deal, right? So, you know, headline comes out and say, hey, we're closer with China. The market likes that. And I think the market's kind of showing us that, hey, if we're that close, all that uncertainty that we're worried about out the door, and we can. Outside of that, I don't have too much on the news. Anything you got, Coach Paul, on the news that you want to talk about?
Well, it's so focused on a trade deal, yet Amazon targets as many as 30,000 job cuts to begin Tuesday.
Yeah.
I don't know. That's kind of a lot of people. But selling it on that news would have run you over. But to me, that's a concern. We're going to see more and more job cuts, I believe, especially in the tech industry. We'll see how that holds. But once again, I don't trade on economic news. I trade on technicals. But I found that one very concerning. But does it matter in trading? Apparently not.
Absolutely. Markets are going to do what the markets do. So let's take a look at the markets. We have 36 different markets we can trade with Topstep accounts. And today, downside, we had cattle down 2.95%. Limit down again today in cattle. I believe it was a limit down day in cattle, if I remember what Coach Hoop said correctly, but maybe in feeder cattle. Correct me if I'm wrong there, Coach Hoop. We saw gold down 3.05%, and silver, our biggest percentage mover to the downside, down 3.62%. Pretty aggressive selling in gold and silver today. To the upside, we have micro Bitcoin up 3.86%, digital gold. Natural gas up 3.9%, and micro Ethereum futures, our biggest percentage mover to the upside, up 5.99%. Coach Hoop said cattle was limit down but came off. Was at one point limit down, but did come off of that limit down. Big selling in cattle. Maybe that's good. I did go grocery shopping this weekend, Coach Paul. Uh,
Mhm.
the prices have not updated at the register just yet, but I'm still holding on for hope. Uh,
There was they weren't limit down?
the prices were not limit down, not at all,
No.
not at all. Um, Not at all. To talk about our big four, we have crude oil up 0.11%, the S&P up 1.26%. We already talked about gold down 3.0, Nasdaq up 1.9%. The Nasdaq, the S&P, and the Dow, as well as the Nikkei, making new all-time highs. All new all-time highs. Four markets today making all-time highs. Let's pull up the Nasdaq. Trading right below the major 26,000. We could hit 26,000 while we're here on at the buzzer. We will let you know if we do. 25,997.75 is the all-time high in the Nasdaq. We are trading 25,995.50. Coach Ball, on a daily, what are we looking at here?
Runaway on the upside.
Yep.
Um, just picking up more momentum as it goes higher. Um, Nothing to stop this. As we talked last week, if we looked at the week when we looked at um, the weekly and the daily look the same. So it's got a lot of upside to me, um, and nothing to stop it. Yeah, I'll put it this way: you sell it. Let me know how it works out.
Right. Yeah, absolutely. Absolutely. It is a runaway market now. One of the things we've been talking about was this daily candle, which was October 10th, turned out to be a weekly candle. We spent a whole week and 4 days inside that candle, and Friday we closed outside of it. This Friday close, we talked about this during At the Buzzer on Friday, Coach Paul, was a sign that maybe this is a little bit of a J trade that we're having here. We have one of the highest volume candles that we have on the daily. We close outside. Are we done trading these prices? And the market opens back up. Of course, over the weekend, we get some news, potential trade deal. And while the NASDAQ was up 2% today, if you were trading it, it may not have felt like we were because we had such a big gap up, right? We opened up the Globex session with a 1% gap up pretty much. And it was a little bit better in the NASDAQ than it was in the S&P as far as extension to the upside. But we opened up with such a huge gap, Coach Paul. Uh, we were talking in the green room a little bit. How do you trade this if you do?
There's, to me, with a gap like that, I don't. I look for something else. It could go, and it went without me. That's fine. One of these, you could just like you did there, take that opening range, attach VWAP to it. VWAP never left that opening range. And what does that mean? Well, market moves on volume, not on price. So in this large up gap, there were no sellers that made any difference. As a matter of fact, as time marched on, those if there were any sellers, they had to turn and run. So if when we go deeper into it, in that case right there, look at the structure of the VWAP.
Very
And
bullish,
trade
leaning.
accordingly.
Right. That VWAP did take a little while. Not surprised to see that it didn't leave the range at all in the Asia session. We started to see price pick up a little bit during the London session, but opening up with such a big gap up, sometimes what doesn't happen, and Hogue says this a lot, what doesn't happen is as important as what does. Uh, I know there were a lot of traders that probably look at this and say, "Hey, that gap needs to fill," and it might, but today might not be. right, where it does. And in this case, we didn't really see any sellers come in to kind of close that gap. Did get the volume to kind of push up and push us through the rest of the day. Looking at the Nasdaq this morning, it was the much cleaner trade than the S&P was. The S&P actually looked like it had a decent opportunity to go and fill that gap because it was so small. And I think actually this is probably a good time to do a little four up here. Let's do the Nasdaq on the top left. We'll do the S&P on the top right. We'll do the Dow on the bottom left and the Russell on the bottom right. And four different equity markets, Coach Paul. A lot of time, we think, hey, you know what? Four different equities, they're going to move in tandem.
Yeah.
And in this case, let's take a look. Time. Just go regular trading hours for all of these.
All right.
So you can see that gap a little bit clearer. Again, we have the Nasdaq on the top left, have the S&P on the top right, we have the Dow on the bottom left, and we have the Russell on the bottom right. Now, looking at this, Coach Paul, I'm not gonna lie, I was kind of expecting the gap to fill in some of these as well. And I traded the one that showed a gap fill. I shorted the Russell today. We talked about this a little bit later in the day. I was short from 25.35s. It wasn't the biggest trade in the world, but I was looking for a gap fill. But these are completely different markets.
Yeah. Yeah. We were talking the catch up with cousin Rusty.
Yeah.
And that was really at that time, that was risk off, or it was defensive buying. Buy the less volatile, buy larger institutions, rotation. But it's interesting in the Nasdaq. If we take last night range and put a volume profile till 8 o'clock this morning, and we'll see where that balance ended up. Right there on the opening, we had no significant selling because VWAP didn't break the opening range last night, and we had the volume point of control finish right there. And what did we get on that first on the open?
The open and Nasdaq is the top left over here. We looked under. One second. Looked under that volume point of control. We tagged VWAP for the day.
Yeah.
Full session VWAP. We tagged that full session VWAP and bounced right away. And there was not a seller in this market right around 25,800, where that VWAP was. Round number, all the selling that came in for the open stops, and it is a kind of slow grind up day until the end of the day, where probably the last hour of this day was fueled by shorts having to get out, pushing us right up into 26,000s. Well, on this open here, Coach Paul, and let me full Nasdaq again. We have this volume profile from the overnight session. Point of control is up here, 25,835, right around 50% of that 3-minute opening range. And on the open, volume never trades lower than that range.
Nope.
Price does, VWAP does not.
And with a large gap like that, I mean, there's going to be some profit taking,
Sure.
or at least some selling to see if it can continue. And we got it. And look at the size of the volume right after in the second candle. That was large selling. And now, well, we made another new low for the session. on a wick. All right. It Where did it go to? The overnight VWAP. It couldn't get under it. Even if you sell it there, you have to recognize you you need it to go immediately. Like you can't give it any time. Or be patient. Let structure develop. What do I mean by structure developing? Attach VWAP to the opening. You saw if you use the volume point of control overnight, that while the price went under, which it's going to do um, most likely, there was no foul. Who's selling? Being patient here, at the least, if you wanted to sell this, you have to go with the flow. And a flow of what? Price or volume? Let's ask our audience, what's more important? What moves the market? Price or volume?
Great question. What do you think, chat? What moves the market more, price or volume? And sometimes there's differing opinion on this, but I know what I think. Deshaun says it in the chat. Volume, volume, volume. Hey, sounds like you guys
Volume.
watch it at the buzzer or something. I don't know. Uh, like you guys are here tuning in all the time. I would agree, right? The volume is going to direct us. Price is the price creates volume. Uh, what comes first, the chicken or the egg? I think this is things, but uh, I think to us, we'd agree that that volume is going to dictate what prices we trade at. The price is just the advertising tool, right? If the Nasdaq is trading at 100,000 in 2 years, it's still going to trade,
So
and there's still going to be volume that trades it. Go ahead, Coach Paul.
what I want to go through and just to follow up on that, if I'm going to go to a live auction like we had in a trading pit. If let's just say I represent a customer order, and I'm 9 bid for 50, and Coach Jay says I'm at 10,
Selling at 10.
and
Yep.
time goes on, and neither of us budge. We're the only ones in the market.
Great point.
Nothing's going to go.
We have two.
Something
We have
has
two
to
prices
break it.
defined there. Coach Paul, please repeat that.
So let's go through this again. I am got a customer order and I'm 9 bid for 50 contracts.
And hold on, real quick, because 9 bid for 50. You're talking like you're on the floor, Coach Paul, and I get what you're saying, right? What Coach Paul is saying is buying at 9, buying 50 contracts at $9. Go ahead, Coach Paul. Keep going.
And you respond, I'll sell you 50 at 10.
So we have two prices defined here. Coach Paul is buying at $9. I'm selling at $10.
Now, both of us are stubborn, or we have or we have no reason to move. I could say I'll pay 10 for none. Now, I'm giving Coach Jay a price and he gets 0. What does that mean? There's no volume traded. So it comes along, and then a third party comes in and says, Coach Jay, I'll pay 10 for 100. Coach Jay sells, I only have 50. And this third party goes, well, I need 100. What are they going to do? They're going to bid 10.
They're going to pay up.
They have to pay up. So what I'm saying is the underlying energy that moves market is the volume. Without volume, there's nothing.
No trade.
And volume leaves a trail. And we see it all the time. A VWAP, opening range breakouts. they move on volume. So it's to me, it's just more dynamic than price alone. When you add volume and price movement, you have you're farther up the ladder in information, and that's where you want to be.
So,
I
Coach,
used to just trade on price alone, and I had learned about volume, but I never really put it together until working with this young man here, stage left of me, Coach Jay. He's the volume guy. It's really in the structure, and you can't teach an old dog new tricks, or at least open your eyes to different perspectives. It really hit home. So once again, without volume, if there was zero volume in a market, you'd have no price change.
we have a comment here, and of course, what we say is how we view the market. Are there different ways to look at the market? 100%. Can you just trade off the technicals? Can you just trade off of, hey, here's a head and shoulders pattern, or whatever it is? Those head and shoulders patterns are created by volume trading in the market. Head and shoulders doesn't, the chart pattern doesn't create the volume creates the chart pattern. But again, if you don't agree, there are so many different ways to view the markets, so many different strategies to apply to the market. But I think, honestly, I think volume analysis, Coach Paul, is fundamental analysis, um, because it's showing us how the market is responding to whatever a catalyst is. Uh, there's a comment here from Crawdad Fish Market. Volume can be spoofed, but price cannot be spoofed. I don't like being spoofed. Bottom line. And there you go. I think the issue with saying that volume can be spoofed is I don't actually believe that it can be. Uh, Executed volume is executed volume. Now, how we read the intentions behind that executed volume tells us a lot. But if a trade happens, a trade happens. Um, where we get
That's
caught up is when we try to read the depth of market and try to make sense of everything that shows up in the depth of market. But if it doesn't trade out, I don't give a shit about it. As soon as it trades out, it means a lot more. So if I'm going to focus on volume, what takes precedent is the executed volume that trades. Do we sometimes call out a order on the depth of market, order on the ladder, on the order book that says, oh yeah, hey, there's 1,000 lot here, and then it gets pulled? It does. But even in that, there's information. If somebody is selling 1,000 lot and then they pull it, what might that mean? Might mean I don't want that fill because I could see price going higher, and it might mean, right? But there are a bunch of different interpretations. Again, we focus heavily on volume because I think that's just what we believe in. Coach Paul traded on the floor, and I ask him all the questions all the time, right? Hey, what what was it like when there was no audible volume on the floor? You weren't really doing too much, and you know, but we don't have to keep selling volume here. Uh,
we don't have to, but I just want to go through this. Spoofing is price based. It's not volume based because that order to be spoofed doesn't get filled. Think about that. This is well it was done. That's 7 bid for 5,000. It's 7 bid at 8. 7 bid for 5,000, trying to get the chickens to jump out and sell them eights. That's literally how it started. That spoofing has been around as long as humans have been interacting in commerce. Now, you can't have spoofing if there's no volume. Well, we had this story about a month ago. This guy used to do that in the spreads between a 10-year and a 30-year. He was a decent trader, but he used to try and do that until one time a large bank said next time he does that, he gave an order, discretionary order to a broker. Says next time he does that, you hit him. And he got hit on like 10, 20,000 contracts. And these are spreads and pretty deep. It was a huge order, but it wasn't like taking 20,000 Nasdaq, and he stuffed them. And it cost them that day. I heard it cost them over $100,000 or more because he literally had to eat it. But here's
It's
the
scary.
difference. It wasn't talk. The
Yeah.
talk is the spoof, and but that's just it. Talk is cheap, but to make a trade, you have to create some volume. Now, there's another way of doing it. It's trying to run stops, but you wouldn't if the volume be very small. It's if you think there's stops, you could go. It's 7, 8. It hasn't traded 8 yet. You go 8 bid for 1 and see if you can get the stops running on a bid.
Yep.
But you can't do that without trading a contract.
You do have to put some skin in the game there. And then, like Courtney said, sometimes you F around and you find out. And sounds like that guy did on the floor. What do you even do with it? I mean, see some panic for sure. New all-time highs here in the Nasdaq. We did trade above 26,000, 26,002. Our new all-time high, 26,075, where we are trading right now. Let me see if I can get this in here. Hit the air horns for the Nasdaq. New all-time highs just made here. All right. Anything else you got on the equities, Coach?
Um, no, onward and upward.
Onward and upward, continuing to grind to the upside. Remember, we do got a Fed meeting Wednesday, so if you are expecting volatility, expect some more potentially on Wednesday. Janish, I scared you. Sorry about that. I was just trying to wake you up. Make sure you're paying attention. All right, let's talk about gold. And Coach Paul, we had a question from Brandon earlier. Brandon, Fast Markets chat this morning. Yeah, I had a really good day to end last week and gave all of it back. Day like today, thinking about changing strategies because the trading day didn't work out. But I think more than anything, Brandon needs a suggestion on risk management, and I want to talk a little bit about that. Brandon, if you could remind me exactly what it was, and we'll go through it. How much as far as profit you gave back. We'll run through these gold charts. Taking a look at gold here, Coach Paul, on a daily. What are we seeing here?
Ooh, teetering on the precipice, if not fell over it.
Yeah.
Not good action. Um, that 20-day, and we saw it towards the close. You're going to have some funds lighten up. Maybe not get short, but lighten up. Why not take something off the table here? And a lot of funds do this off that 20-day for profit taking. But we played around with it for 2 days after that large break, that engulfing candle. It cannot be ignored. Or it can be ignored at your own peril. Seriously, it's just that's the sign there was some liquidation. Now we're getting another sign, getting under the 20-day moving average. When's the last time we closed under it?
Last time we closed under the 20-day moving average, we got to go back to August 21st. August 21st, right
So
before this major rally up. We since then we've had to zoom out 30% rally, and we are just over 10% off the all-time high.
yeah. Now there should be some buyers under here, bargain buyers, but we didn't find them at the 20. Would be interesting to put that VWAP from the breakout level again. So when we
Oh yeah.
closed above that all-time high.
So what Coach Paul is looking at is we had this prior all-time high that led us into a ice age in gold, where we stuck it around the same prices for about 120, 130 days. If we look at the day that broke that high and we anchor a view up to there, that is going to be this. What color we want to use, chat? Let's use pink. That is going to be this pink line on my chart here. That is VWAP from this basically this entire rally. 39.4480 is that price.
And that looks like the next line in the sand or in the gold dust, maybe. Then we could get there tomorrow.
Yeah,
Um, I,
absolutely.
Here, I want to ask that: does this look like something a falling knife? It's an old thing. This is don't try and catch the falling knife.
Yeah,
This is heavy. This is heavy, heavy action. Highest. Where's the highest volume? And that might be all-time volume.
and we're talking about some candles that are this is all-time high volume in gold. We have 3 candles in 4 days that are probably top 5 all-time volume candles in 3 days, and they're all sell side. So yes, there is some legitimate selling coming into this market
Yeah.
again, and we're seeing it at all-time highs, so not too surprising. Um, but when you start to see it, yeah, it's like, okay, maybe the ride is over.
Yeah. Well, volume. It's a heavy volume. What does that mean? That's heavy selling off the all-time highs. I don't. I'm getting, like I said, to me, the turn comes under the 20-day moving average. Now you've lost momentum. Now this is short-term trading daily. Daily is short-term trading. Let's take a quick look at the weekly.
Look at the weekly, the change.
Remember Friday? What was that level we were looking at?
Last week's or the weekly low. The weekly
Yeah.
low. We talked about this on Friday, and we just took out 2 weeks low, right? We took out last
Yeah.
week's and the week prior, and that is the first time that's happened since this rally began.
And now we're not, you would you would need to find some new buyers here.
Yeah.
Now there's a lot of late buyers because what is this one where everybody is and their brothers talking about gold and not
Yep.
the Nasdaq, and even their sisters and aunts. Or so we have that the climax feeling on the new. It was headlines, so everybody's in, and then you have this reaction. That to me is a double top on a weekly.
Yeah.
It's in.
We've seen a couple of these weekly candles where, and Hogue was talking about this morning, but with these huge wicks on, like Coach Paul is saying, this double top here right below 4,400. Um, we've seen these lead to maybe not complete sell-off moves, but definitely big consolidations before the next move up, right? If we keep zooming out, go out to a monthly, look at this monthly candle here. The last time we've seen a wick like this on a monthly candle to the upside, we stayed in 3 months of consolidation, this little monthly Dolby Dorito until we broke out. So for now, it looks like the top is in. And
Yeah.
and we go back to we're day traders, right? So I still, Coach Paul, I'm a little bit delayed in adjusting to wanting to sell gold, right? I'm still hesitating a little bit to buy it. We did the market kickoff with Anne-Marie yesterday, and we talked about taking a long for a trade that worked out, but that was just a trade, and I think it's really important to. And if you go back and watch the market kickoff, Emery and I were taking a long trade, and we almost immediately identified it as a scalp where I'm not looking for a huge opportunity to the upside because when's the last time we saw a huge opportunity to the upside in gold that sustained? And if you can't align what you're looking at with what the market is saying, I think that's when we get in trouble. So back to Brandon's point earlier that says I gave back 1,900 last night. We were discussing adjusting stops to being based off of structure and not being based off of a number like $50 or $100. got chopped up and couldn't help but continue chasing to win back what I lost. Well, I would assume, Brandon, and this is just an assumption, but if you were losing money in gold last night, you were probably trying to buy it and holding on to a bias that the market needed to move to the upside. And you're going to get stopped out in that case a couple of times. But with that being said, a couple of things need to happen, right? When do I accept that, hey, maybe I'm not reading the market right, or maybe I'm not agreeing with what the market is saying? But Coach Paul, if I'm trading gold and I'm saying, hey, I only want to lose $50 a contract, $100 a contract, even with micros, how does that fit in the market structure for gold right now?
What I want and what is the market is giving, okay, can be two different things. So what time frame were you trading on?
Brandon, if you can answer that question, what time frame are you trading on? Let's just assume it was a 5 minute though, and we'll wait till we get that 3 to 5 minute, 3 to 5 minutes. So we go with the 5 minute, Coach Paul.
All right, let's go and see what the average true range is. When you traded last time, where did it start?
Uh, Average true range last night in gold was anywhere from $9 to $5. We'll call it.
Okay, when you got in, you need to know it. Let's say you got in, and this is going to be
Go Shanghai
this
Open.
is huh?
I said let's go with Shanghai Open.
All right,
So
let's go with
7.5.
Shanghai Open. Yeah. So where was it at the Shanghai Open? 5?
7.5.
7.5. Let's just because I don't like fractions. Actually, I do, but let's just make it even 7 even. All right. On a 5-minute chart, that's $70
One micro.
on one mic, high to low. No, it's not necessarily $70 worth of risk. I kind of want to clarify that, but that's the I'll put best word I can think of is the vibration at that moment. Now, that's every 5 minutes. So inside of that, if you're trading too tight, if you're putting stops in at that's $7, by the way, in gold. All right. So even on a micro, it's $70 swinging. So if you put on 5 micros, that's not $350 range, let alone getting on the wrong side. So if you get on the wrong side, all of a sudden, and you're over leveraged, wham, you're down $1,000. If you're down $1,000 and you have a $3,000 balance, you just lost 33% of your equity. And I can understand this is where it all goes wrong.
Yeah. I cannot afford to lose that much.
So
Can't take
what's
that
our
loss.
next move as human beings?
I have to get it back.
I have to get it back.
I cannot
Now,
accept being wrong here.
on the other side, you could be over leveraged and get rewarded.
Such a great point. Great point. And
And
someone else, hold on, Coach Paul, real quick. Someone else made that point earlier. They said I made $4,000 last week, and then I overtraded this week and gave back 2,000. What do I do? Were you overtrading last week? And like Coach Paul just said, just got rewarded for it. Um, there's sometimes positive or negative reinforcement in the market. That is such a great point you're making there, Coach Paul. When I over leverage and I win, I feel like I'm a good trader.
yeah, I've done it. There's two sides to luck.
Right.
Right? You could be lucky, and then luck runs out and you're unlucky. So there's nothing wrong with. By the way, this is what you're here for: is to discover
100%.
and learn. And remember, don't hang your head in shame. Just go, okay, wow, I have to learn. I have to adjust. And that's why I think watching that average 2 range to get an idea of how much you're really risking. Then on top of that, you have to understand your trading plan. Does it make 10 trades a day? If you're averaging 10 trades a day, you got to size down because the more you trade, the more risk, the more exposure. So, and and sometimes you get the upside of that. The key is to measure right, not be, the Goldilocks scenario. Not too big, not too small, but in line with what the market's risk is at that time. When we went through this, when we went in February, March, and April in the Nasdaq, where it was what 5 times its usual risk, you could be trading the same size.
I'm only going
And
to
you
risk
can
$200 on the Nasdaq.
remember that.
You put the trade on and lost $200 instantly. Because the volatility was so high that, and the spread was so high, right? We're talking about, at some point in March, April, there was a 40 tick spread in the Nasdaq daily, right? This was daily. There was a 20 to 40 tick spread in the Nasdaq. So if I only want to risk $200 and I'm trading, I'm a mini trader. I trade the big contract. No reason for me to trade micros. My favorite influencer said that anybody who trades micros is a loser and they're not a real trader. So I'm going to trade the big contract. And you take two of them in extreme volatility, and your account is blown. And you're like, oh shit, I can't do this. Yeah, you can, but you have to trade a reasonable size for the account that you're trading. Um, so, Brandon, to answer your question, and Coach Paul just answered it there. Your stop should be based on the volatility of the market, right? Not how much you want to lose. The market and how much you want to lose is a function of your account maintenance, but you can't try to fit the entire market into your account. So let's go back to Coach Paul, your ATR, and Brandon was saying that he was trading an hour after the market opened. At that point, the ATR was $9. So if I take a long here, let's say I'm gonna get long because ultimately what we don't know is what the market looks like after it prints, right? We only can go with what we see in real time, right, Coach Paul? So is it okay to be wrong about where I think the market is going?
Yeah, it's okay.
Well, this was a
You,
buy. Looked like a great buy.
hey, that's just it. Because when that statement, is it okay? Well, it's okay because you're dealing with the uncertainty. Even if you have I don't if you have a trading plan that, that has a 90% winning rate, you could have 10% that blows you out because you didn't manage it right. And that happens. The thing is, yeah, because when we don't put in a stopper, we don't measure it, we think we're dealing with certainty. There is no certainty. The moment you the moment you think it's like that, the difference between confidence and cockiness. I'm confident it's going to go up. Okay. But if it goes under here, I can afford that. There's a big difference between what I can afford and what I'm willing to risk. And that's the difference between confidence and cockiness. The ultimate cockiness is to get in and don't have a stop. Your audio is off, coach.
No?
Yeah, we're good.
I said, I know I'm going to be right. Why do I have to have a stop?
And if once you say that, stop, shut it down, and really understand you don't know. But you're willing to take good risk. That's because you have an edge.
Yep.
There is no trader anywhere that is successful that says, I'll take whatever you have. And I'll go back to that story I just said. The guy goes, I'll buy 10,000 and wham, he gets hit.
You didn't
Okay.
have a plan for that 10,000.
I- okay. The hunter becomes the hunted.
Yeah.
But going back, yeah, you can be. It's this biggest thing is having the proper um, daily loss limit, because guess what? There, it's going to come. You either can allow it to be reasonable, within 10 to 12%, or unreasonable, 50%. That's unreasonable. Now, when you go on tilt, and these are the lessons you learn. Or if you don't learn them, what happens? They repeat. So I don't know where market's going. I actually, because I went through this, and then I had to have a mantra: is I don't know. I don't know.
Uh,
So if I don't know, I have to enter with some parameters, with a plan, an exit plan. Because I'm older and I was young when the Vietnam War was happening, and thank God I didn't get drafted. I was too young for that. But the biggest discussion at the time in that was exit strategy. It's easy to get in,
yeah.
but where are you getting out? Under what circumstances? Or are you going to force yourself until you win? So before you get in, you have to have an exit strategy. When you don't, is when you lose control, because it's too damn easy to lose control.
Yes, it is. Yes, it is. Brandon says, "Can you finish this example?" So yeah. So real quick. So let's say I got long here, right? And Brandon said, "So if the ATR is high, risk will have to be high, or I shouldn't take the trade." We have to think. We can adjust how much risk there is. Coach Paul's default suggestion is going to be 2 ATRs on the time frame you take the trade. So let's say I got long here. The ATR was $10 in gold. So if you go based on that suggestion, that's $20 as far as your risk goes. That's where it shows that you're wrong based on the normal market fluctuations. Now, you might hear me say $20 in gold. You hear Coach Paul say 2 ATRs, and you're like, guy's crazy. Like, how is he telling me to risk this much? Um, the way we change that is the contract size you're trading. $20 in one micro gold is a lot different than $20 trading the big gold, right? So we want to try to avoid loss avoidance because losses are going to happen, right? But when those losses do happen, they should be measured in this case. So this one, give the market the space that it needs to work, and try to uh, avoid preventing losses. But again, if that risk sounds like a lot, right? In your question there, if the ATR is high, the risk will have to be high. Well, naturally, yes, it is going to be high. But what adjustment can you make to alleviate that risk? Now, this is as a risk manager now, not as a trader. As a risk manager, you get to decide how many units of risk you put on. In low volatility environments, do I want to trade more size? Maybe. But if the volatility is picking up, which it has been in gold, I have to scale down because the risk is now, it could be, let's go back to a daily really quick. The risk in gold this week as compared to a month ago is double. The daily ATR has gone to $108 when a month ago it was under $50. So you're not trading the same market. So you do have to adjust. All
Yeah,
right.
I put it this way. You might have started you thinking you're playing on the $5 table, and with that kind of move and that kind of, you're now all of a sudden you're on the $50 table and nothing else has changed.
Mm-hmm.
So know it's a volatility is a living, breathing animal,
Yep.
and it's is once you're aware of it, you're like, oh, good, because professionals, money managers watch that, and so they can understand how much size they can put on to keep their risk parameters consistent.
Mm-hmm.
And by the way, if you get to the smallest level of let's say a 1 micro and that and it
It's
and
not
that
your market,
180
kid.
it's yeah. Well, like, you know what? I'm not trading that. I'll find something else that's in my price range.
Yep,
What I'm saying
100%.
is you could have a champagne tastes, but a six-pack budget. You have to trade in your budget.
Mm-hmm. Uh, Also, I see some people maybe just coming into the conversation or saying, "Hey, what?" There was a question: "What data do we have to go long here?" What we are saying here is that sometimes, I picked a random price. Brandon was saying he was going long around this area. This is not a trade that I took, but we're saying when you get your either take a trade that is not based on any type of data, or your data is wrong, right? Sometimes we are going to get it wrong, right? And this trade in this case was just wrong. I just picked a random price. Let's say I looked at the chart here. Here's the trade idea. We came off the low of this range. I think this has the potential to push back up above 4100s. That sounds like a reasonable trade strategy. Is it going to be wrong? Yeah, every trade strategy is going to be wrong. But in this case, if I'm wrong, I can't risk my entire account, right? So that's what that was there. We just picked a random spot where that sounds like a reasonable trade idea at that point. And I could be completely wrong about the market direction. What this proves, though, is that when I'm completely wrong about the market's direction, if I over leverage, my account is going bye bye. Right? I'm going to buy a reset. I'm going to start thinking that I have, psychological issues with my trading, and maybe you do, but maybe you're just over leveraged and you're doing it to yourself, right? But there you go. Brandon, the last thing, we spent a lot of time on this one, but hopefully this is helping a bunch of people. Got you. So using one micro, I should be risking based off the ATR. So like Coach Paul said, two ATRs. Is that still okay if it's not near any structure like VWAP or support resistance level? All that being said, can I just can I look at a market, Coach Paul, say, oh yeah, I think this is a good buy, and then just buy it? No. You have to have some type of structure or something to get in. Like trade location still matters. I can't just throw in a trade and say, yeah, two ATRs, because I'll take a bunch of two ATR stop outs if that's the case, right? But if you have a reason to get into that trade first and then risk the two ATRs, then yeah, I think context definitely matters. Context matters. Anything else you got on this conversation, Coach Paul?
No, it's a great conversation. And by the way, why do I say 2 ATRs? I could make it 1 in 1 or less than 1 because
Mm-hmm.
I don't want to take that risk. Well, if you're inside that 1 average range, then you stand a very good chance of getting stopped out a lot. It's too tight. It can be. I mean, so what we find out, oh, I want to risk $50, but the average range is $150. You die to death of 1,000 cuts. Um, Two, you're going to trade less, but you're going to get stopped out less. So that's why it's 2. I want to be outside of that variation range. And that's great conversation. Should we move on to the crude?
Did Crude do too much today? Let's see, because we do have some questions in the chat that I think I want to get to. We got some pretty good questions here. What are you seeing in Crude?
We're playing with that 200 moving average, but we've found balance here. It's going to move one way or the other out of here. I don't think it's going to stay up here too long. Due to our experience of being in a range forever, most likely going to curl around. But that's my view. Anything else from you?
Here's D in the chat. Crude oil 91 ticks for NYMEX. That's kind of where I'm at with it too. We talked about this during the opening call. I think crude is still interesting, but every time we get close to this 200 moving average on the daily, we start to see the ranges contract. So I'm kind of waiting for a move away from here, away from this zone. But the week leading into this rally was pretty nice. But right now, not too much I'm gonna expect out of Crude here. But if you're a range trader, that 200 moving average on the daily, which right now is at 62.05, the spot to look for some opportunities up here. But right now, kind of just chopping around. D says Crude sucks. But let's get to some of the questions we have here in the chat. Let's see. Question about live trading. What if you had your stop loss or take profit within the Sunday opening gap in the Nasdaq? How does it get filled? You mean if you were holding overnight? Okay, so let's say I short the Nasdaq and I held it through the weekend because I'm like, oh man, this market's gonna sell off. We're not gonna make all-time highs. Where does my stop get filled? If my stop was here, it's definitely not getting filled there. It's getting filled maybe on the opening tick, depending on what that volatility looks like. So my stop is probably getting, let's say I had a 50-point stop. I'm probably risking about another $100 there, which is why traders ask all the time, oh, why can't we hold trades overnight, right? Prop firms are limiting us from holding trades overnight. There's something that's called a margin requirement for holding onto these trades. The broker that I use, AMP, margin requirement for holding one Nasdaq contract overnight is $22,000, which means I need to have $22,000 in that account. And that's why, right? Because we don't know where that market is going to trade. Someone had asked, right, Courtney, you're getting spanked. Someone had asked the other day, what's the longest you held onto a trade? Mine was a Nasdaq trade, but it was a micro Nasdaq trade. Futures trade 23 hours a day, and there's more than enough volatility. I don't see, and I could be wrong on this, Coach Paul, but I don't really see a reason to hold big contracts overnight.
Unless you have big money.
Unless I have big, yeah, right.
Right. I mean,
yeah, if this 100 point gap meant nothing to me as far as my account goes, then yeah. But
it's just it's a mute question to me.
Yeah,
you can't prop trade and carry positions. You don't, those gaps. Everybody says, "Well, I could have been long."
Yep.
Because and we're human, yeah, because we have a positive bias that look, I could have helped. Except for you could be short and it sucks.
Yep.
Because if you haven't taken that beating. So, and plus there was Bitcoin, there was a big gap. What else? There was gaps all over.
It was gaps everywhere. It was a gap in Crude, gap up in Crude, Bitcoin, natural gas. There were gaps everywhere. D just said it in the chat. AMP maintenance margin is now $33,000 per contract, so it's getting more expensive to hold positions overnight. So yeah, I'll keep day trading those, and maybe we hold some other stuff. But let's get to some of the other questions that we have here. My VWAP tends to jump sharply when there's a gap in the market. What setting should I change to have it smooth like that on your chart? So the VWAP, I have it set to, this gap here. I don't really consider this at all because this is set to session. This is set to session VWAP, so I'm looking at it from the start of the market. So that, that big gap up, I'm not really paying attention to this at all because this is just starting from the start of every session. What you could do for maybe for it to not look like this, because this could be a little off-putting. If you don't use the VWAP indicator and instead you use an anchored VWAP, you could just anchor to the start of the day, and then it looks a little cleaner, right? Where you don't have that, but it's just the chart's trying to catch up to data that didn't print, so it's going to skip over a bunch of those prices. Let's see. We have see Monica and Brandon are talking to each other in the chat, a little upset about how your trading has gone. It's a good thing. That's a good thing. That means you can improve. Like Coach Paul said, we're all here to learn, especially with Top Step accounts. I know when I was learning, I wish there was a prop account, learning with my own money and learning hard lessons. But if you're in a prop account, understand that are still in a learning phase, and a learning phase that you could earn from, right? As well, Coach Paul, I think you could say what it was for you when you were interested in trading, but you didn't have the money to trade right away to trade big size. It was, hey, trade a paper account or write down your trades on a piece of paper and just take solace in the fact that you read it right, but you don't get to make any money from it, right? The great thing with prop firms is you are still in a learning phase that you could earn from. So if you're upset, if you learned something today or this week or late last week or whenever about yourself as a trader, that's an opportunity to improve at a lower cost than it could have cost you if you were trading in a personal account or anything like that, right? So take lessons from whatever you're upset about. Don't harp on it and don't try to get it back in blood. Um, the market always wins when I try to do that. So uh, yeah, take it as a lesson and then do what you can to improve it.
Yeah, this is like it's a learning process. It truly is. And then once you it take, and by the way, someone asked earlier, how long does it take? Longer than you want. That's a couple years to really get good, minimum. Because in that you have to define whether you're just getting lucky or you have some skill.
Yeah,
Well, you're only as good as your trading plan. Otherwise, you're just running on good luck or bad luck. Now, understand that's a great attitude to have. Is like, I need to improve. Well, unless you review your trades and keep a journal, how are you going to do that? Because you're just running on emotional fuel. So keep it up, Monica. You've been around. Yeah, it really hurts. But remember this: there's an old quote, and I love this quote: "Is fools try to prove when they are right. Wise men try to find out when they are wrong." And that's really um, the task at hand here. Wrong or a bad trade, being wrong or and losing money, and be having a trading error and having a loss can be two different things. If you lost money, it was part of your trend, and it was part of your risk, and it was well within your risk affordability. That's just a trade that lost money. But an error is taking too big of a trade or not getting out when you should have, or we used to call cancel close. Your stop gets close, you move it.
yep.
And by the way, it's been going on in the years I've been trading. People do that all the time. That's an error. But you're if you're here and you're learning, so keep it up. Define what is throwing you off. Be honest with yourself.
Good stuff there, Coach Paul. Good stuff. Man, wow, we are above time right now.
Oh
We're
yeah,
over
and I
time.
gotta go.
Couple quick things. How long should it take to pass a combine? It should take as long as it takes to successfully take good trades. I would not put a time frame on it. Um, I had a trader who was in my VIP group that was trading the same combine for 6 months and didn't pass it. Um, and he completely accepted the fact that he was in a learning phase and said, "I'm going to learn how to sustain an account. I don't care how long it takes. Trade small size." And I actually like that, right? Some people are going to tell you, "Oh no, why take?" And I've heard this in other places, and again, everyone has their own opinions, but giving the suggestion that you should speed through a combine to get to an express funded account to me is just really irresponsible advice because you might be saying that to somebody who has no idea how to manage an account, right? So, hey, you know what? You just got your driver's license. Go buy the Ferrari and drive it at full speed. Just got your license yesterday. right? That's that type of advice. So it should take as long as it takes for you to understand how to completely execute your game plan, understand when it's going to be right and when it's going to be wrong, and learn how to manage an account over time. Um, that would be my advice there. Coach Paul, anything else you got to say before we go for the day?
Once again, develop a trading plan in it. Learn how to execute the plan and how to manage the money. If you're just trying to get out quick so you can get a payout, bottom line, I understand why you would do that, but that's a difference between gambling and speculating. And that with that, I got to go.
All right, Coach Paul, get out of here. We're going to get out of here as well. Coach Hoop is doing a class at 6 p.m. time. Then we have Coach Dakota for slow markets, 8:30 Eastern. But before that, we have Coach Ray and Coach Vince in Discord, 6 p.m. and 7 p.m. and 8 p.m. Eastern time. Aaron with the London Open, and then D with the Euro Trade. Make sure you check those times on the London Open and Euro Trade. Did switch clocks around, and we're going to catch up next week, States. Um, but it should be listed on the Top Step YouTube page. And we'll be back for the opening call tomorrow. Trade well, everybody. Manage your risk, and we will see you all soon. Bye.
Bye.